Let's make a trip now to Wilmington, North Carolina. We're going to analyze property here because we recently spoke to somebody who's in the real estate business in Wilmington who wasn't quite sure whether or not Wilmington is a good investor market. So let's go and do a little research, and this is for him. So here's Zillow.com, Wilmington, North Carolina. The first place that I want to go is over to the local info because I want to do an analysis of a median priced property in Wilmington. So I'll go over to home values. I'll change it to sale price. And I'll change it to 10 years. Hey, that's not bad. Okay, so the median price in Wilmington was $111,000 10 years ago, and it's gone all the way up to a peak of about $2.25, and then come back down again to a bottom of $171, but then it's gone back up again. So now after the housing crisis has corrected and rebounded, we're at about $187. So we'll figure out in a little bit what kind of appreciation rate that is. But first, let's go over to homes in Wilmington and see what we can find here. Here's a 4-bedroom for $189. Looks good. And it's not presented as an investment property, nor should it be, because it's a single-family home. Most buyers are going to be occupants. So we're going to analyze this property. Looks good to me. So what I want to do first is I want to jump over to moneychimp.com because I want to know how Wilmington has performed over that 10-year period as an annual percentage rate. So I go to my calculators, I choose return rate on the right-hand side here, and again, we're going to go retrospective here. What happened over the last 10 years? So in this case, the present value is 10 years ago of $111,000. We just found that out on Zillow. The future value, which is modern day, is $187,000. This is a 10-year period of time. So I click calculate, and wow, look at that. That's a 5.35% annual appreciation rate, which is a heck of a lot better than inflation, and probably 2 points better than the national average. So we're liking this so far. Now I want to go over and take a look at Craigslist for Wilmington. And I've already been there, so I'll make this quick. We'll look at 4-bedroom houses in Wilmington to get a sense of who's the competition out there that's trying to rent out houses. What are they asking? It looks like it's a safe bet to be someplace in the zone of, $1,200 to $1,700. So let's jot that down, and then we're going to go and cross-reference that with Rentometer and ask Rentometer if I've got a Wilmington, North Carolina. I got to spell it right if I'm going to expect this thing to find it for me. Wilmington, North Carolina at, $1,350 a month for a 4-bedroom. How does that compare to what Rentometer sees in the marketplace? So here we go. Rentometer is telling us that $1,350 for a 4-bedroom in Wilmington is reasonable for the area. Anything under $1,200 is a really good deal. Anything over $1,800 is a little bit of an expensive deal. And so I think that $1,350 is actually a little bit light. I'm going to make our number more along the lines of $1,450. So let's hop over to the cash flow analyzer software now and punch in our assumptions. So I'm going to go kind of quickly here because I've done it slowly in the other demonstrations, and I know that we want to get right to the goods here at some point soon. So we're going to say we're going to pay $187,000 for this property. We're not going to have to make any initial improvements because the property is in good condition. So we're going to assume that we'll put a couple of bucks into this place over time. We'll use the specific method, and I'll say, I'm just going to put miscellaneous. And let's say we have to put, $2,500 into the place in year 4, and then another $2,500 in year 7. Again, just being fairly random about that. The resale valuation, we're going to assume we're paying market price for this property, and we're going to leave the 3.5% annual appreciation in there. We'll go back later and make a modification to see how that outstanding annual rate of return impacts our returns long term. We're going to assume we have a 30% down payment because we always do, and we're going to change our mortgage rate to 6%, and we're done. Let's go to the rent roll. Sometimes I got to scroll up on this. Okay, rent roll. We said that we like $1,400 as a monthly lease amount, and we're going to keep it at a 5% vacancy rate, and we're going to put a 2.5% annual rental increase. And I'm going to go to the expenses now. Skip accounting and advertising and association fees, auto travel, blah, blah, blah. Cleaning, let's assume that I have to pay $250 every 2 years to get a deep cleaning. Commissions, I'm going to pay $14.50 every 2 years to re-rent the place. So we'll call that, a nice round number of $750 in commissions. Insurance, we'll call that $2,500. Landscaping, I'm going to take care of for my tenant, so I'm going to pay $500 a year in landscaping. Legal, maintenance, let's call it another, we'll let the maintenance be the responsibility of our tenant. Pest control, I always like putting, especially in the Carolinas, boy, you ever see the spiders they have down there? Let's assume we have $250 a year in pest control, and then $500 a year in repairs. Property taxes, I forgot to go look. Let's go back over to Zillow and see what the property taxes are on this. Here we go. Tax history. Wow, jackpot. Look at this. The taxes in this community are low. Now, one of the reasons you're seeing the Carolinas doing so well in terms of attracting companies in and attracting population is because this property in New York would have taxes of $8,000 a year. Here, they're about $1,500. So if for some reason that's inaccurate, I don't know what to say, but it's so good, it's almost too good to be true. $1,500 a year in property taxes. And utilities are the responsibility of my tenant, and I'm going to put $1,000 a year in miscellaneous just because the taxes were so low that I have a little room for cushion. And we'll assume my expenses are going to go up at a rate of 2% per year. All right, so our assumptions are there. Let's go take a look at the graphs. This is a beauty. Okay, so our cash flow is negative in the very beginning. And again, I'll remind you, there are lots of people out there that will say if it's negative cash flow, it's a bad investment. They would be dead wrong about this property. So you're putting a couple of bucks into it in the first period of time. So big deal. You're losing $50, $60 a month the first year. What is it? $25 a month the second year. And then in the years that you're making the improvements, you have some cash to put in. But you're making money on this thing. And if you've got a 10-year hold period, you're making decent money by the 10 years. So you're break even or better from practically day one. Let's jump right over to our property equity analysis. If I hold this property for 15 years, I'm going to wind up with north of $200,000 in equity in the property over 15 years. So if this investment was designed to be a retirement account, it's going to perform nicely. If the investment's designed to be a college fund for a newly born baby, it's going to be a great investment. And then we'll go over and we'll look at our quote-unquote statement. How did this property do overall? Well, as steady and stable and consistent as it's been, is producing with market rent and an under market appreciation rate, because we didn't even put the real number in yet. We're still looking at being something approaching 10% internal rate of return. Now, if you can show me a place that I can get something north of 9% internal rate of return on a stable investment, I will eat my hat. You can't do that on Wall Street. You can't do that at the bank. You can only do that in American real estate. And Wilmington, North Carolina is a golden example of that. Now, I'm going to go in and change my appreciation rate to how it actually performed over the last 10 years. Okay, we've just had a housing boom and a housing bust. We are in a miserable recession, and yet Wilmington, North Carolina has already recovered and shown a 5.35% annual appreciation. Now, can anybody guarantee it'll continue that way? No. But what are the reasons why Wilmington has been doing so well for the last 10 years? It's because the Carolinas are drawing population. They're drawing jobs. It's a beautiful place to live. It's a very high quality of life. Now we're going to go take a look at what that actual appreciation rate did. It's not going to affect our cash flow. Remember, cash flow is income minus expenses, so that's going to stay the same. So we'll go to the equity analysis and see if this was a long-term investment, which it ought to be, for my retirement lifestyle, for my kids' college. Now, instead of having $200,000, I've got just shy of $300,000. So that little tweak of the national average of 3.5% annual appreciation turning into above national average of 5.35, I'm looking at a $300,000 payday in 15 years. And then, of course, let's go over to our internal rate of return. So look at this. We're north of 12% annual rate of return. And so I'll say it again. If you can show me a place that I can invest my money in a reliable way and get better than 12%, I'll eat my hat. Now I'm going to change one more assumption. I'm going to go back to the rent roll because you recall that 1450 was kind of the middle part of the sweet spot according to Rentometer. Let's say I got 1500 instead. Now, how'd I do on cash flow? Well, look at that. All right, I made money every single year with the exception of the years that I had to put money in. I'll take it. I'm calling up the broker right now, and I want this property because this thing is just about the best piece of real estate investment that I've seen in a long time. And here, the internal rate of return is now getting close to 14% and then flattening out at 13%. So again, you can tell me about Google, you can tell me about Apple, you can tell me about General Electric, tell me about all of them. I don't care. I want Wilmington, North Carolina.